quick trade recap from the previous day's trade. Okay, it was taken here. It was a buy. In my analysis, I always analyze the previous day and line it with the 15-minute auction. With the 15-minute auction. My priority, first of all, for this week was variable. Why it was variable? Because on the 15-minute auction, we have a volatility. A volatility is always a sign of indecisiveness. Okay? We have a seller, we have a buy, and this is a volatility. Previously, it could become a balance, but the task failed and the balance was not, this reversal balance was not repositioned. If you want to understand more what I'm talking about, I'll attach the link to several videos, to the previous video where I'm speaking in detail about this balance and the whole thing, the weekly analysis, daily analysis, hourly analysis. I made all these in the previous video. All right. So what do we see here? Let's analyze the previous day, as I just said. The previous day, what did it show to us? We had this fall. We had this fall down to this very point, to the previous zone of the bias activation. Here, it was here. This is the day. Okay, this is the day, not this. Okay, and then what happened next? And then here, at the second half of the day, we see this bias activation. Who could buy here? So you know this timing. Wait. This timing is a specialist time. So what can we do? We always analyze the closure of the previous day, the volatility map, everything. The overnight volumes are not that huge, nothing special here, and this was actually a capture volatility. We captured the previous level, so this level was held. This level was held. This support was held. Okay. Next, what happens next? So we have a good closure. The value area is below. The closure is up. Neutral plus. I would say neutral plus because we don't see a reposition. We don't see an impulse above this zone. So what happens the next day? We need to watch the pre-market very, very closely. Of course, we have this reaction, some little negative reaction here at this zone, and nothing. Take a look here. Take a look here at this zone. Yeah, and this zone becomes a support for this day. Now, let's take a look here. This is 1 minute chart. The previous one was the 13-minute chart. Okay, what we see here. This is the day. This is Tuesday. So this level, this exact level is a weak resistance level here. 52.63. 52.63. Now, take a look here. What we see at the beginning of the New York session, we see this rotation, and then you could already take a trade here. This is an aggressive trade. Yes, this is an aggressive trade. We see this rotation, and when this rotation was volume gathered here was positioned as a buying volume, you could take a trade here. And your stop would be just about 20 ticks. 20 ticks. Where to put a take profit. Take profit. Take profit. Remember what happened last Thursday. We had a build-up volatility. This is a build-up volatility. And then all this volume was positioned as selling volume. Selling volume, okay? But then we see bias reactivation from the previous zone of bias activation. And what should we do? What should we do? We need to watch the pre-market of the next day, like we actually did, like I actually did, and take decisions. Take decisions. The buy, yes, my priority was variable, but it doesn't mean I would stay on the fence and do nothing. Yes, we had a fix here. On the weekly time frame, we have a fix here, an influencer fix, like I explained in my previous video. But please remember this. Now, first of all, the balance is not confirmed. It's not confirmed. Having a fix and inertial trade, this is the first segment of the balance. First segment. We just assume this can become a balance because we don't see a second segment. A second segment is a responsive activity, like for example, it happened here on the hourly time frame. Here. Previously, we had a balance. This was a responsive activity, seller's responsive activity. This was a balance. And only when we have a responsive activity can we confirm this is a balance, okay? And fix alone can be a factor for sell. It weakens buying, but it can be a factor for sell. Never. The only factor that can be for sale is responsive activity. If we, in the nearest future, see a responsive activity here above the fixed level somewhere here, it will mean that we have a factor for sale from a macro model. Weekly time frame is a macro model. I am always making top-down analysis from the weekly time frame up to 15-minute time frame, okay? We should not forget that on our current activity, we saw a buy, and the buy is still here. And this is what I exactly understood. I always read the volatility map of the previous day of the whole auction, everything. We don't see any super negative reaction here, okay, from this zone. No, we don't see. And it meant for me that the buyer could potentially reactivate at this zone. And this is exactly what happened. This is exactly what happened here. Now, about your entries, potential entries. If you are worried that this zone can be protected by sellers, okay? This zone, the resistance zone of the previous day. What do you do? This is the level. You can wait when the price goes up, like it happened here, moves up above this level, and will show you that it's ready to move higher. Okay? And that's exactly what happened here. We have, if you understand the market structure, throughout this single day, we read the current volatility map, we read the current activity. We have an impulse, we have a local fix, local little fix, we have an inertial trade, we have a responsive seller's responsive activity and a buyer's responsive activity. And this trade, so if this early trade were here, is an aggressive one, because you may be worried about that this level would be protected. This level is already a conservative one. This buy is a, no, not here, here is a conservative one, because the price right now is up. It's above the level. There is nothing to worry about. You just put you enter here, put your stop loss somewhere here about 20 ticks, and so where is the target? The target is here at this zone. Why? Because, as I said previously, these built-up volatilities, this is a gathered volume. It affects the market. It can't be any other way. It affects the market. We see this negative reaction, but this negative reaction doesn't create any significance for the 15-minute auction. But at the same time, in the current activity, we can see some retracements. And this is exactly what happened yesterday. Okay? We saw this retracement. And that's absolutely okay. It was difficult to participate here, to take any trades here. But this trade itself, as I said, we had an aggressive trade early at 8:30, or when we saw that the price is holding this level, when it became a support, you could enter at 9:30, and that's it. What is so the profit if you trade one micro contract? I usually trade 3 micro contracts. If you trade just one micro contract and you have for example, your funded account is maybe 1,000, just 1 grand, what can you do? So your profit is about $300. One tick is about $1.2. So that's it. I take a high risk because I'm more experienced, and that's it. So what I recommend you to do to understand more deeply what I'm talking about, watch my previous video where I'm speaking about the structure, about all the auction principles in more detail. I'll also attach a video, my mastermind, about 1 hour mastermind, where I speak about all these in more details. Okay, I think that's enough. See you in the next video.